Hello everyone, thanks for watching my video. I'm Steve, and the goal of this channel is to educate you to have a better understanding of investing. Let me make it clear, the contents of this video and this channel are not construed as investment advice. We're not liable for investment loss of your investment decisions after you have watched this video. You need to find a qualified investment advisor or financial advisor to help you to formulate a better investment strategy. At first, we're going to talk about whether we're going to have another Great Depression. Then we're going to talk about the stock market, earnings reports, and the market outlook. Upon doing research on how to make investing related content on YouTube, I stumbled on one YouTuber talking about how we are going to enter the second Great Depression. The Great Depression was the single worst economic disaster in the history of the United States. It started in 1929 when the stock market crashed and lasted till 1939. It wiped out the wealth of millions of investors and caused sky-high unemployment rate. The major causes of the Great Depression are the crash of the stock market, the mistake of the decisions of the Federal Reserve, and the background causing the freezing of the lending. During 2008 financial crisis, we learned the mistakes from the Great Depression. The government injected liquidities to banks, insurance companies, and auto manufacturers. Those actions saved us from another Great Depression from happening. Right now, the banks are in excellent condition. The mortgage lenders will not even lend money to self-employed people. The major U.S. high-tech companies derive a significant amount of revenues overseas. Even if the U.S. has a recession, which I think is unlikely soon, the growth in the overseas market will help alleviate the slowdown in the U.S. It is highly unlikely we are going to have another Great Depression. You may ask why I want to discuss this. I think the YouTuber is using scare tactics to generate YouTube views for himself. I believe that the low interest rate to stay in the next few years. It will still be one of the best opportunities to generate excellent returns. If the viewers listen to his advice, they probably will sell their investment holdings and miss the great opportunity to make great returns. It is called opportunity cost. The opportunity cost is a loss of potential gain from other alternatives when one alternative is chosen. I have a friend who has lost a lot of money in 2008. She has a couple of $1 million. She always thinks the market is too high, so the majority of the money is in cash. Her opportunity cost might be in millions of dollars. If you have 100K and you put them in cash because you have listened to the YouTuber's advice, thinking we are going to have another Great Depression, in 10 years, the 100K is still going to be 100K. If you invest 100K in investments that can generate 10% compound return for 10 straight years, the 100K will be worth 259K. The opportunity cost here holding cash instead of investing is 159K. In order to be successful at investing, you not only need to do extensive research, you also need to be open-minded and optimistic. I'm always an optimistic person. Maybe sometimes I'm a little bit too optimistic. Today, the SPY Spider closed at $463.06, up $8. The resistance for SPY is at 470. SPY will be range bound between 450 to 470 for a while. The QQQ is up $8.52 at $389.21. With today's strong close, QQQ is more likely to test the 400 in the next few weeks. The only negative is that the volume today is on the low side. Right now, investors are ignoring the Omicron variant. The only weakness today are from the COVID-related stocks. Yesterday, Micron Technology reported quarterly revenue of $7.69 billion, beating expectations by $10 million. Micron stock was up $8.65 today, partly because the index was up, partly because Micron guides next quarter revenue up Micron stock was up $8.65 today, partly because the index was up. Also because Micron guides next quarter revenue up to $7.5 billion compared with consensus of $7.3 billion. I do not have Micron stock and do not plan to own it because Micron is in a commodity business. Nike reported second quarter earnings of 83 cents per share, beating expectations by 21 cents. Nike's revenue growth year over year is only 1.1%. I do not own Nike shares and do not plan to own it in the near future because the growth rate of Nike is too low. Today, Tesla closed very strong today. Today, Tesla closed very strong. I bought some Tesla January 1,000 calls intraday. The next resistance for Tesla is $1,000 and the support is $900. After the market closed, it is reported that Elon Musk has sold over 500,000 shares of Tesla stock. In the summary, I believe that many stocks have found the floor. With year-end approaching, the sellings will abate and we may see a market rally in the new year. I'm still fully invested right now because I think with interest rates so low, the risk of not fully invested is not making enough money. If you have a few years time horizon, there's not much to worry about. There's always very hard to predict short-term market movement. If you like my video, please click the like and the subscribe. It will help the YouTube algorithm to push the videos to reach more people. If you want me to cover something you are interested in, please leave a comment. Your support is greatly appreciated. Thank you.